bit opportunistic here in Japan, because what we were seeing on Friday was US yields in particular running higher. We saw dollar yen getting up to 152. You may remember from the flow show in that morning and the F.A.C.E, we were sitting here scratching our heads about why they hadn't intervened up to that point. You know, the comments out from Suzuki that they were going to fight speculators. You know, it was really like, well, okay, you're at the last line in the sand, you're on the doorstep. You know, why haven't they intervened? And then what happened later was we got a series of events, let's call it that. Started off with our mate Timmy Nick Timiraos at the Wall Street Journal, coming out with a story, pretty much as yields were hitting new highs and dollar yen was up, you know, close to those highs, saying that the Fed is barreling towards a 75 pip hike in November, so the next meeting coming up, and could well step down to 50 basis points in DEC. Now, that's pretty much what we knew already was the possibility of happening. But still, this guy is being called the new Fed whisperer. It took that confirmation to really turn yields around at that point, and we saw a little dip in dollar yen, as you can see there. And then on top of that came the intervention. It happened really in stages, as far as I saw. We saw a dip, as you can see there. I mean, this is a 15-minute chart, so you can see we got a first move down to, you know, 150.5, then down to 150. Then it broke down, and it seemed to come in steps, and that was a bit strange because at first I was thinking, oh, maybe it's another similar move to what we saw previously when we got these spike moves that you can see the prior weeks, you know, that moved 100 odd pips and then didn't follow through. But it really seemed to come into the market that they were intervening. There could have been also some profit taking in amongst that, because we were saying during the day, you know, traders aren't going to be long into the weekend with the heightened risk of intervention coming in early Monday. So a little bit of opportunistic, as I say, from the Ministry of Finance there to hit the market probably at a decent time. And thus we saw it all the way knocked down. Then we had the bounce early overnight before it then got hit again, probably again using the lower liquidity time to really push the case on Friday, catch a few more people out. But as you can see, it's been completely reversed. Kay, what did you make of it, that intervention when it happened on Friday?
Yeah, well, exactly the timeline as you describe it, and then I said already on our F.A.C.E show on Saturday that it's exactly that. I think they chosen the time well. They also chose the it came very close to what Kuroda said, excessive moves, when he said, he literally said any move of 200 to 300 points is excessive. And the low that day was around just below or around 150, and we were very close to 152. So that's one. Then you had Timberlake's really, it was just the catalyst of what was already happening, because Dali and other Fed speakers already said something about that they were looking at starting to slow down the moves. But then, as you say, Friday afternoon, taking advantage of what was happening already, and I'm pretty sure that they were looking at what was happening on the yields, and they took advantage of it. And then, yeah, as I already said, I'm pretty convinced the rest is dollar liquidation, because we've seen exactly the same thing happening on other dollar pairs on Friday. I think the move overnight is a bit. I'm not sure that they have sold it for 400 points or 500, some 400 points. I also think it's a continuation of what was happening on Friday, because we've seen cable hit 114, euro dollar pretty close to 99, Aussie 64, etc., etc. and then it gradually reversed. It's also very, very fast move, right? It all happened in the space of 15-20 minutes. So that tells me that they have not done too many rounds. I think a lot of it is the scare of the action, a bit of a panic move, and then down to where it was roughly during the first, before the first intervention, around this 145 and a half, 145 3/4. So, but the thing is, yeah, they're fighting on all fronts. And the yen is fighting on all fronts. So is the MOF, and then you have the Japanese government putting in, what is it, 20? They're talking about 26 trillion yen of extra stimulus. And the Bank of Japan, Kuroda, still not moving. So it's still a very, very tough battle. And I maintain what I've said already a few times, is that if the dollar wouldn't turn around, or other currencies, and if yields won't come down more, it's going to be a very tough battle still going forward. But this week's BOJ is going to be interesting. Kuroda has surprised us to the other side, so never say never. That's markets always prepare for the impossible, the unreasonable, or the unexpected.
Yeah, definitely. And getting back to some of the news, because just after we got that FAC.E story, which, as you can see there, gave yields quite a sharp hit lower. We had a couple of Fed members out as well. Daly was warning about over tightening, and saying the Fed will step down, not pause on hikes. They'll step down to maybe 50 to 25 pip increments. And she's comfortable with rates, a neutral rate of roughly 3 to 3.5%, which is maybe a little bit higher than maybe some might expect. A lot of people, penciling, round about maybe somewhere between 2 and 3% for a neutral rate. But just as you're comfortable with a 3 to 3.5% rate, so we'll see where they get there. But that, as I say, that knocked yield. So there was a bit of a secondary wind to the fact that we saw the dollar sell off as well. Now, jumping back to Kuroda, he was in Parliament as well last night. He was saying that, he's now saying that a rapid weak yen is becoming a factor for CPI. And they've been a bit wishy-washy about the yen weakness. Some say, even Suzuki last week, I think it was Suzuki last week, saying that weak yen has merits and demerits. But a little bit more comments on what the weak yen is doing for CPI. Still expect CPI to slow down, and that real wages are actually falling, which is very undesirable. As Kay says, we have got the Bank of Japan this week. Very likely that they don't change anything at all. That's probably going to give yen pairs another lift, I would think, once we get that confirmation, though they may be sitting on the sidelines waiting to hit any moves like that. Switching over to the UK, now late last week we had the Boris story that he was in the running for being PM and had reached the 100-member target needed, the threshold needed to go into the actual hat, if you like, the actual draw. And then last night he came out saying that he is the most likely to be able to lead the Conservatives through an election in 2024. He had the numbers to get over, but he pulled out. And that was a bit of a surprise for the market, because it really only leaves one runner, and that's Rishi Sunak, who's, at the last count that I saw, had 181 people backing him, well over the threshold. The only other person potentially in the running still is Penny Mordaunt, and she's still very low numbers, 31 at my last look. So it could be a case that we get to this afternoon when the first round of votes, or when they cut off the backers, that Rishi Sunak is the only person in the frame, and if that's likely, he will probably be declared Prime Minister either later tonight or maybe tomorrow.
Ryan,
yeah.
Sorry to interrupt. Do we know if Johnson's supporters or his people are going to be backing Penny or not? Because that's the question, right?
Yeah, it is. A lot of them have already been jumping over to Sunak. This is what I've been following. Let's do a little update there. This is what I've been following to get a rough idea of the numbers. It's not gospel, but these guys at Guido Fawkes, they know a lot of politicians, so they've been keeping a guide on it. You see, they're 189 now. Sunak more than 31. So unless there's some moves we don't know about, it's pretty much looking like Sunak's got it with a big majority.
So that's supportive for the pound.
Yeah, I think the final numbers, if we know them, will make the case. It's, I'm looking for something well in the 300s perhaps, and that would cement the deal that he can actually unite the party rather than have a split in the party. If he doesn't get up to those sort of numbers, we potentially face problems, because like you say, maybe a lot of Boris supporters not necessarily will jump behind Mordaunt, but won't vote for Sunak or won't put their back into him. So then that means he may face some troubled times when he gets in the hot seat. But it looks at the moment like Sunak's going to get it. As Dale mentioned, that did see a lift in the pound overnight. I did chase it a bit and buy the quid last night on that news, way up at 1382 in this move up here, just after it hit the 114s. I bought a bit more at 113.50. Got out a bit of that this morning when it failed to break failed to get up to 114 again. I also missed out on a little bid, which I've been filled on now at 113. If I'd have got that overnight, I would have hacked it out up here and be done with a trade. But instead, I'm long some more at 1300 down here a few moments ago. So see what happens with that. It hasn't followed through, which is a bit of a worry. But now we're getting this bit of dollar weakness across the board. I'm happy to stay in those longs for now. I know just a couple of questions up there. Who was I looking at? Someone was asking, Richard, asking about Euro Oz and Euro Kiwi. I think Caveman's got probably got a bit more on the text than myself, so he'll have a look at that in a little rundown.
I saw the question.
Sorry, mate?
I saw the question, so I'll have a look.
Yeah, okay, cool. Right, so looking at some of the other moves, because obviously there was a lot of dollar weakness coming in on the back of what happened with the moving yields daily, that sort of thing. But what I was worried about is, can we break some of these levels that have been in play for quite some time? If we are, let's get that, looking at something like Aussie dollar, we got to move above this 63, 40, 50 area. Then it took out this other area. My biggie level is still 64, and we can't take that out. And here we are now, all the way back down again. So there was a lot of noise coming in on Friday, but not enough to change anything meaningfully. So at the moment, we look like we're still going to be ranging. I wouldn't be surprised if something like Aussie dollar, we do get another look down here. I would be very cautious if we did, because that would be quite a swift return down to that level after testing it last week. That would potentially indicate that we want to have a further look lower and perhaps some fresh lows. If we hold around this sort of area today, then that gives it a little bit of a springboard to maybe have another push to 64. And the same picture is really obvious elsewhere. Move up to 99, couldn't get through 99, now all the way back to the 98s. Ranging. And until we get something that really changes the narrative, it's 50-50 whether we carry on going up or whether we push further down. I expect to maybe see a bit of a pause this week as we go into the ECB. We know roughly what they're going to be doing. 75 pips is the call for this meeting. And then it's going to be about what they signal in towards the end of the year and potentially where rates are going at the top or terminal rate, if we get any hints on that. Alongside all the other things, QT, all the other programs that we've had rumours about, TLTROs, changing the bits and pieces around there. So lots are going to come in, and we can touch on all that later this week. Kay, do you want to have a quick look around the grounds?
Yes, sure. And let's straight away have a look at what Richard was asking for.
Just missed the beginning of your comment there, mate.
Said, yes, sure. Yeah, I know. Something with my microphone is when I unmute, it does seem to take a few seconds to really click on. So, all right. So straight away into what Richard was asking for. Euro Kiwi is the first one. It looks like it could come off further, but then we could also argue that we are building a bullish flag here. So we need to pay a bit of attention to, and we are actually not really far around the 173.10. If that would start to go again, that could mean that we are bull flagging here. On the fundamental side, I'm really in between two seats here. We've had one comment from RBNZ or saying that they may be close to a pause, but then again, later, the market starts to want to price again a 75 BP hike. When is the next? Let me quickly check when the next RBNZ is. Well, not before the 23rd of November. We will have the RBA first. Yeah, but also the market is trading a bit of this, the expectations for the ECB. So in the very short term, but that's really, really tight, 173.10, 172.60. I'd keep an eye on 172.15.20 to start with. If that goes, we may have a retest here. And if that goes on for a bit longer, yes, then we can probably start to talk about a reversal. We need a close here below 1, 2 lows. That's going to be 173.25 around. If we get a daily close under there, it may start to looking a bit more with more room to the downside. Why not go in this double layer around here then 166.75. On the Euro Aussie, there's a good top building here going on around where is it? 156.95, 157 the figure. We're still in trading relatively bid, and this could be a pattern as well on the Euro Aussie. But a lot is going to be decided later this week on the ECB. I'm not ultra keen on taking fresh positions in those pairs ahead of the ECB. I will talk about the ECB later because I'm having half a plan on some of the Euro crosses. But yeah, respect this one, 156.60, then the bigger one around 157, and then on the downside, it's a bit of horizontal here, 155.65, but mainly it's just below 155, 154.85, and then closer to the 154. So you've got 200, 250 pips to play inside, and don't think it's too wide, because if you look at the width of the moves, we are doing those 250 points in one session because the market is a bit on edge, a bit undecided of what can happen further, because we've got those central banks coming up. We've got the uncertainty as well surrounding what is going to happen on the yield fronts going forward, and what's happening with QT as well. Let's not forget that, and I just want to throw that in here right now, ahead of the ECB. It's going to be about what they expect on the yields, but also what they plan to do with their asset purchase program. In other words, QE. Because they're expected to end it around come springtime, and then start to do some form of QT, but that could be even too late if really the economy is turned down. But if they decide to bring it forward towards the end of the year, euro could really get a little bit of a lift. So besides whatever they may say for rates, keep an eye on what they say later this week on the asset program. So this a bit for those two. I'm going on to Stella. Are you there?
I am here indeed.
Yeah. Okay. I'm going to your favorites, the metals. Is this a double bottom? That's
a very good question, and this is something that I think we will get resolved after the FOMC. I was writing on the chat room. I think that everybody's bearish now, and I think that we're going to be squeezing risk in general, so basically metals probably as well, into the FOMC, at which point Powell will probably disappoint. But I really feel strongly that I think we're going to be squeezing. And if you noticed, we had, 22 speakers on the summit, but 21 of them were bearish overall, right? So I think the market's going to get squeezed a little bit. But is it a double bottom? It could be, yeah. It depends on the Fed. That's the problem. It depends on the Fed.
I was thinking they may be a little bit close to each other, but we are still talking about nearly a month in between the two lows. It could be if all of a sudden Mr. Powell starts to sound a little bit different. Okay, we can't ignore what Nick Timiraos is sending onto the waves these days, because then we had Dali, we had Evans, we had or was it William saying that they may be starting to look at a pause? I don't recall this. There's been so many Fed speakers and people talking on our trader summit, which was absolutely great, I must say. So we're looking at this. I think the 1690 again. This is now really, I'd call it a heavy traffic zone between 1670 and 1690, and we've always seen some accelerations if we get below or above. So this zone here holding, and then you finally break, and you see that's a $50 move, right? It's not nothing. It's 3%.
Yes.
And if you go above, you squeeze, and you do a $40 move, which is a 2.5%. So those are not really small moves. So there is something to do in here, but I wouldn't be surprised going into the FOMC right here, right in the zone. Call it 1680 or so. I wouldn't be surprised to go in there, because that's a little bit my overall view, is that we are going to, yes, see a little bit more dollar adjustment perhaps, but barring it going fast, I don't really expect personally to break too many ranges. So that's for gold.
I agree, by the way. I agree with that view. I think we're going to squeeze a little bit more into the FOMC. And then, of course, it's a big decision depending on what they tell us. So then all bets are off. But like you say, that move is not negligible, right? It's not like, 10 pips. It's, 2% moves, 3% moves. That's pretty, it can be pretty important depending on your sizing, obviously.
Yeah, exactly, and so that's a good moment perhaps to point people to those kind of moves that we are seeing. I mean, right, you have the dollar-yen interventions, which are causing waves across the spectrum, of course, because people don't only do dollar-yen and the rest and ignore the rest. They also do yen crosses and all around. And if you look at the moves elsewhere, they are pretty sizable. We've done a 2% move in the euro dollar, and from low to high, low on Friday to high overnight. 2% is not negligible in a currency, whatever people may say. So adjust your risk and your I'd say trade smaller amounts if you feel a bit uncomfortable but still want to be in the market, or just sit on the dock of the bay and watch the ships roll in and out. The silver, that's I think I like this kind of when the trend lines are pretty clear and get respected. So we ran up to this on mainly overnight, right? But then stopped on there. We had the same here. We had the same on the lows. Same here. I think we are going to flip-flop or yo-yo inside this zone. It's wide. It's a $1.5. It's a $1.5 nearly zone. That's nearly 10% on silver. But then still, I think it's there. I'm not sure if we can press through 20 before the FOMC, unless we get some more well-directed Wall Street Journal articles. But yeah, I trade the range there as well. But I'm starting to think that in the global picture, providing, of course, that the FOMC is not remaining uber hawkish and everything, blah, blah, blah. I think there starts to be a case of being a bit careful with shorts in the more medium term. There may be this washout, but if it goes down there, I'm probably not going to hold back anymore, and I'll try and do something. But I need, therefore, I need economic data not to completely crap out of bed, because bad economic data are not really supportive for an industrial used instrument, right? So we have to be taking the macro picture into account as well. But I'm starting to get a bit itchy. I'm not even sure we get there, but around here maybe just a slow build up or so. And I'm really starting to look at it. Stella, I don't know if you have a different view.
About silver, no.
Yeah.
As I said before, I think we have to wait until the FOMC, and Powell will probably disappoint. So that's why I'm disappointed. I mean the bulls of risk bulls. So that's why I'm not in a hurry to get back in. As I said before, I'm going to get long again at some point, whether it's lower from here or on a breakout higher. I don't mind, because I think the move higher when it comes is going to be big. So I don't mind missing the first little bit of it. So yeah, okay. I'm waiting.
All right, understood. Euro dollar, we've said it already. Give and take. Well, we've done two big figures, but then we have respected roughly the correction here as well. And I need to. Oh, I'm on a daily. I need to clean my stuff up a little bit. No, this one is gone, broken. Yeah, I trade the ranges and really trade the ranges into the ECB and wait for what Lagarde is coming up with. We've seen the PMIs today, disappointing somewhere, a little bit better in France, or holding up slightly better perhaps in France. But yeah, the European situation is not good. So I think on its own, the euro may struggle to get higher a lot soon versus dollar at least. The rest we will see. As I said, on the trump card will be APP in my opinion. In the meantime, trade ranges. Same thing on the cable. In my opinion, we're in ranges here. 114, the first one, showed it a couple of times as well last week. 114. Then I think this is really the zone where if cable starts to go above 115 and a half, in my opinion, whether it be short or medium term, something may have changed, and we couldn't rule out move back up to 117, 50, 60. Been really a very, very good level every time we came to visit it. So keep an eye on that 117.60 downside. I'd say 111. Then the lows on this trend line 109.25. That's going to be important. That's going to be the other side, the 109.25, in my opinion. Euro sterling. I'm thinking that for the short term, at least, this 86.5 could be enough. But never say never. If Rishi Sunak gets voted in, which is more than likely, we might have a little bit of an event move, the confirmation move, and get back down to lower 86s. But I'm not sure. Looking at the UK data, that there is much more room to get a lot lower here. 85 around it. We have below 86 is where it has to hold. If it doesn't, then we can see a move back lower. On the top side, once more, 87.25, 45, bit of a crossroad here, bit of a traffic light. Get above, then we should, and we failed here on Friday. Then we should have a retest door of 87.88. So yeah, ranges there as well. But I'm more looking at catching a knife than selling it right now after the confirmation. What else? Dollar yen. Ryan already looked at it. Quick overlook of here. We are still in the uptrend. There's not, and if you look at the bigger one, of course, there's absolutely no doubt that we are still in one. But the interesting thing is that first intervention level, and since then we have been starting to creating another trend line here, briefly below. I think mid 145s are now, and here 145, low 145s. This is where it plays for the short term. If we get below there, then MOF may have won one battle, and we could see it back lower down to 140s perhaps. If on every next intervention this 145 is holding, and Powell disappoints just a little bit, I think we're back in for the highs. But it's all a bit in doubt. So I'm keeping my powder dry. I'm having really short-term stabs. I still can't buy yen, so the direction is not too difficult to guess. Another one, and as people know, I'm still in this one, but I'm really small for the time being. I try to wait for the ECB, and as I said, I've got half a plan there in this Euro-Mex. I'm hoping for a bit of a hawkish kind of statement, and then Lagarde start to disappoint in her speech on APP and going like cautious again, and then so I'm hoping for a bit of fresh air here, and a move back up to the higher 19s to re-enter a bit more. Really, that's it for me. Dollar rand still firmly in the channel on the top side. We need to break sub 18, 18 the figure really, sub 18, and hold below to break the pattern and have a 2% room lower. And with that, Ryan, I'm passing it back over to you, mate. Unless
Thanks
somebody,
very much, mate.
Mike, what is Mike saying? Mike, Powell will squash Wall Street hopes again at the FOMC. Like Jim Bianco said, they don't want to believe him. Yeah, I mean, there is something. I still haven't, the one sentence that he said at the beginning of the rate hikes is still resounding in my head, and some pain may have to be taken, and the market refuses to believe a lot of things. So there's going to be this continued repricing and of expectations on the yields, and I also think that's responsible, and that is why we are moving so much on currencies as well. Is that the bond market is violent in its repricing of expectations all the time. If you see, and I just repeat that here, and Stella, who has been trading rates himself in banks, will, I think, confirm what I'm saying. If you see daily moves of 20 BPs in a US 10, or as we've seen today, 25 BPs in short end
extraordinary moves.
Extraordinary
moves.
Those are big moves, and there's a lot of money is involved, right? And we can't forget the portfolio managers, how impacted they are in these kind of moves. So that explains also those two big figures on the euro dollar. I mean, we're in a very, very interesting period, and I don't know whether they want to calm the game a little bit, even the volatility in the bond market. I don't know, but we will have to wait. If Powell doesn't give us anything, be ready for next week, because it could be another violent one. Yeah. So Stelios was saying.
I was just going to say, when I was market making short-end rates, so 0 to 3 years, any move in Eurodollar futures or short sterling futures of more than, say, 10 basis points, I mean, that was a big day. So these are big moves. Any way you look at it.
It's even big moves in just a couple of months. Going from mid twos up to 4.5, nearly 5% in a few months. It's, that's unheard of. But then, how long has it been since the US had rates up this high? In a proper hike cycle, not coming out of something and gradually getting
early 2000s, right?
Before the crisis, yeah.
20 years. There's people who be trading this market who don't know what a high interest rate environment is. If you're 30 years old, came into the market when you're 20 or something, trading it, you don't know what trading a high interest rate environment is like. It's new for people. It's only us old fogies who remember back that far and have lived through it before. But as I've mentioned before, this is what you are seeing here. For anyone who is fairly young, what you are seeing here is what you need to learn, because this is the experience that you will hopefully take. And when it happens again, when you get in similar situations, you know how to react. You may not know how to react now, but you'll know how to react the next time it happens. And the only reason we know what we're talking about is because we've got that experience. We've lived through this sort of stuff. So as much as you may not know what you're doing or understand it, learn from it.
Yeah, and what Paul says, Greenspan days, yes. And then if you're a real dinosaur, I started trading during the Volcker days, and that was something. And there you had moves like these every day, because they were ramping rates higher. I mean, if you put the rates at 15% in the dollar, then you know what volatility really is. but even for today, but if you look at the if I can just steal 30 more seconds, we have been in this low interest rate environment for 15 years, or 15 years. And if you look at coming from Fed funds 0 to 0.25%, the 10s were around. Let me see where they were. Like for the best of the. I need to go on a longer time frame. Hang on a minute. I'm just checking my own rates. Yeah, we had this fallout, but let's say they were around 0.75%. If you do a move from 0.75% then we went up to 1.75% in March. A 1% add on a 0.75% base yield is already a big amount. But then if we see since the Powell pivot in June, July last year, if you move from low ones up to 3.25%, that is a massive move already in a short space of time. And then from then on, we had those shocks, like 3.25% down to 2.65 in the space of a week, 2 weeks, let's say. those are huge moves, right? And so we cannot underestimate them. So whenever you trade and whatever you trade, keep those moves in mind, because the market. And I don't like the word repricing, because repricing is a bit fixed, because you when you reprice something, you set it at a new price, and that should be the new price for a certain period. I think they are just hedging, and they have to hedge expectations, they have to hedge flows, so let's call it the hedges that they have to do. They are very, very violent. So that is just one thing that I wanted to say.
Yeah, thanks, mate. Wise words as always. Right, just before we wrap up shop, you've probably seen some of the data already. PMIs in Europe started in Australia, actually. They're coming in softer. Not so much a divergence that we saw previously. We're seeing all aspects dipping now. Same can be said today coming into Europe. France, manufacturing, services, both down. So same in Germany. So everything's sort of coming down in line now, where we saw some divergence between manufacturing and services. UK as well, falling further into contraction. So this is a theme that's picking up now. The global recession fears. You need to watch your commodities like oil, because whatever's going on with bidding and production cuts, it's going to be this data is going to be feeding into those global recession fears. And we have got quite a busy week of data this week as well. We start getting the Q3 GDP numbers coming in. We get that on Thursday with the US, and then Europe on Friday start giving us their flash GDP numbers. In amongst that, US consumer confidence coming out. Excuse me. Also PMI week, as I say, has started there. Obviously, the central banks are going to be in focus. Bank of Canada, Bank of Japan, Eurozone, in terms of that. So quite a busy week to take us into Fed week, but Fed week's over a week and a half away, and there's plenty of central banks in the meantime to get on with. So lots to look at. As always, we wish you luck this week. Please trade safely. We'll obviously try and guide you as best we can. Thank you as ever for coming to the Flow Show. And as always, we shall see you tomorrow. Thanks, Kay. Thanks, Dale.
Have a good week, everybody.